The other thing is that for you to be able to take a good advantage of all this, you need to be tracking your records, because if you don't know how much money you have and how much profit you have, you wouldn't know that you are profitable, right? So I'm just going to jump real quick to over here. Just 1 second. So I'm just going to jump right here in here. Let's see. So let's see. Go here. So I'm just going to jump into QuickBooks here. My face will disappear, but I think you can still see me. So if you have QuickBooks, my advice is please connect all the bank accounts. All right. It's very, very important to keep your books up to date. So connect your bank accounts, set aside a schedule, do all your accounting on a regular basis, preferably weekly. Then when it comes to time, say once a month, I'm going to suggest you do this once a month, because if you invest regularly, you get something called dollar cost averaging. What that does is that when you invest today, if say the shares were like $5 and you have $100, you can buy 20 shares, right? So the next month when you do your books again, and then the shares has dropped to say 250, that's dramatic, but to 250, you get to buy more shares for the next month. So if you keep up with your books every month, you know the profit. You can pull profit by month. You just go here, you go to reports. The internet is a bit slow today, so my apologies. So you can pull your profit and loss over here. Okay, so when you go up on QuickBooks over here, let's see, over here you can just tell it you want, say, last or this month. This will be truncated, but so over here, it's a little bit slow. Oh, I guess not. Okay. So anyway, this is a sample file. But if you pull, you can just give this to your financial advisor or your accountant. But make sure you're not going to go back and make changes to it. You give it to them. They will be able to go in their system and then calculate how much they think, like estimate how much they think that you can put away in an investment account. And so this way you buying shares on a regular basis. If you keep doing this with compound interest, that's another term. Compound interest meaning that if you say you put away $100 and next month it has grown to $110, right, with interest. What happens is that then the interest for the following month is calculated on 110 instead of the original $100. And then the following month, let's just say it's 120. The interest will be calculated on with a 120. So what they mean by compound, it means that interest is going on top of interest. And so if you are investing regularly, that's how you get to take advantage of compound interest. So that's another term for you all to understand. So I want you to please keep up with your books, stay in touch with your accountant or your investment advisor or financial advisor, invest regularly. Some people do self-directed IRA, which is like individual retirement accounts. Unless you're sophisticated enough to understand it, I personally would not even do it for myself. I just give it to the financial institutions to do that, because there's so much involved in self-directed that I'm not even gonna go there. So you probably will hear people talking about that, meaning you can set it up yourself and then you can take money from it to do investments and stuff. I don't want to mess with the IRS when it comes to rules. So I say hand it over to someone who really, really know what they're doing. And then you can focus on your business and grow your business that way. For the SEP, there's also different kinds. You probably will hear the word 401k, owner K. It's pretty much the same thing, except some of the rules may be a little bit different. So again, contact somebody, but the bottom line that I'm really, really trying to bring home to you is, as a self-employed individual, whether you have you are a sole proprietor, or you are in a partnership, or you have an S corporation, or you have a C corporation, or LLC, whatever the form that you have, you are still entitled to do a retirement account for yourself.